We are live. Let's do a quick stream on Bill Ackman. Tell me the story of Bill Ackman. This video just popped up on my feed where Sahil Bloom was talking about Bill Ackman and how that one interaction, one connection with him led to his book being one of the top sellers on whatever list, New York Times or Amazon. So yeah, I was really curious. Like, I've heard this name Bill Ackman, but we don't really know the story of him. Bill Ackman is a prominent American billionaire hedge fund manager, best known as founder and CEO of Pershing Square Capital Management. His story is one of ambition, bold investment strategies, high-profile wins, significant losses, and an knack for stirring public attention both through his financial moves and more recently his outspoken presence online. Born William Albert Ackman on May 11, 1966, in Chappaqua, New York. He grew up in a well-off family. Father, Lawrence Ackman, ran a successful real estate financing firm, which gave young Bill early exposure to the world of business. He attended Howard College, graduating magna cum laude with a degree in history in 1988, and later earned an MBA from Howard Business School in 1992. His education laid the groundwork for a career that would blend analytical rigor with a flair for taking risk. Ackman's first foray into investing came shortly after college when he worked for his father's firm. He quickly realized he preferred the role of an investor over that of a service provider, sparking his interest in the financial markets. 92, at the age of 26, he co-founded Gotham Partners with a classmate David Berkowitz. The hedge fund grew to manage $500 million in assets by 98, focusing on real estate and distressed companies. Gotham faced legal battles and shareholder disputes, particularly over a deal involving Hallwood Realty, which pitted Ackman against fellow billionaire Carl Icahn. By 2002, Gotham was wound down, marking an early setback in Ackman's career. Undeterred, launched Pershing Square Capital Management 2004 with $54 million in seed money. His strategy was clear: activist investing. Rather than passively holding stocks, Ackman would buy significant stakes in undervalued companies and push for changes, sometimes aggressively, to unlock value. His first major success came with MBIA, a bond insurer he shorted in 2002 before Pershing's founding. He spent years researching and publicly challenging MBIA's AAA credit rating, arguing it was overexposed to risky mortgage-backed securities. When the 2007-8 financial crisis hit, his prediction proved correct, and he cashed out with a substantial profit, cementing his reputation as a sharp contrarian thinker. Publicly challenging MBIA's AAA credit rating. Pershing Square's track record includes some remarkable highs. 2014, the fund posted a 40% return, far outpacing the S&P 500 thanks to bets like the turnaround of General Growth Properties, a mall operator he helped rescue from bankruptcy. Another standout moment came in 2020 during the COVID-19 pandemic. Ackman made a $27 million bet against the credit market, anticipating a crash as the virus spread. His timing was impeccable. Within weeks, he turned that into $2.7 billion, a trade hailed as one of the greatest in hedge fund industry. However, his CNBC appearance during this period, where he warned of economic collapse, drew criticism for allegedly inciting panic to boost his profits, a charge he denied. Yet Ackman's career hasn't been without stumbles. His most infamous step was $1 billion short bet against Herbalife in 2012, calling it a pyramid scheme. The campaign turned into a public war with Kyle Icahn, who took the opposite side. After years of battling, including a $50 million PR blitz, Herbalife's stock didn't collapse as Ackman predicted, and he exited the position in 2018 with a significant loss. Even worse was his investment in Valiant Pharmaceuticals. Starting in 2015, Pershing bought a massive stake only to see the company implode amid allegations of fraud and price gouging. Ackman sold his position in 2017, swallowing a $4 billion loss, a blow that saw Pershing's value drop over 30% and sparked redemption pressures from investors. Despite these setbacks, Ackman has shown resilience. He's rebuilt Pershing Square, which now manages around 15 billion in assets, focusing on a concentrated portfolio, including companies like Chipotle, Hilton, and Alphabet. In 2024, he aimed to take Pershing public with 25 billion valuation, but scaled back after raising only 2 billion, opting to refine the plan. His net worth, estimated at 9.3 by Forbes, reflects both his success and his ability to recover. He's a philanthropist, having pledged to give away at least half his wealth by the Giving Pledge. Pershing Square Foundation has donated over 500 million to causes like education and human rights. He shifted from a long-time Democrat donor to endorsing Donald Trump in 2024. 2017 divorced first wife, Neri, MIT professor, designer. Today at 58, he remains a polarizing figure, a brilliant investor to some, a brash opportunist to others. His story is one of calculated gambles, public feuds, and an unrelenting drive to prove himself, whether on Wall Street or beyond. In 2020, Bill Ackman pulled one of the greatest trades in the history. This is the one. Let's go. He bet against the credit market. The result, so that is Bill Ackman. He bet against the credit market. The result, he turned 27 million into 2.7 billion in just 30 days. Call Icahn. Background story: 2010s were no good for Ackman. He underperformed S&P 500. He lost 1 billion in Herbalife short. His fund shrunk from 16 billion to 6 billion. He had to recover confidence. Early 2020s, he was looking for a comeback. Two activists have been at loggerheads over the investment for 5 years. Bill Ackman, negative 760, Carl Icahn, plus 1B. Early 2020s, Ackman noticed that COVID-19 was spreading fast. He reasoned that businesses that would get the largest damage were hotels, airlines, restaurants. To exploit the upcoming crash, he started to buy credit default swaps, CDs. What are the credit default swaps? CDS. They're basically owning an insurance on another company's debt. Okay, if the company defaults on its debt, you get the payment from the insurance company. A typical credit default swap contract is a 5-year contract. Ackman heavily bought CDS. He would pay 27 million premium every month. Protection buyer, protection seller. Quarterly payments of X basis points per annum. Reference bonds. COVID-19 hit the US in the mid-2020. Hospitals were overwhelmed, so the government imposed lockdowns in major cities. Hotels, airlines, and restaurants started to default on their debt. This skyrocketed the price of CDSs that Ackman held, as you can see in the below chart. He had started to pay premiums in February. It only took 30 days for defaults to start. His premium payment of 27 million turned into 2.7 billion in just a month. His portfolio closed 2020 up 70%, while S&P 500 was still struggling to get out of the negative territory. Listed investment vehicle has bounced back. Pershing Square Holdings. Wow. Lesson. In this trade, Ackman demonstrated all the characteristics of great investors. Analyze thoroughly, stick with fundamentals, have courage to be contrarian, demand favorable risk-reward ratio. That's all it takes to become a great investor. Analyze fundamentals, courage, demand favorable risk-reward ratio. Bill Ackman on dealing with disaster. Make a little progress every day. After losing 4 billion in Variant Pharmaceuticals, other Wall Street investors started betting against his firm Pershing Square to further compound its catastrophic 30% loss and force liquidation. To make matters worse, his shareholders filed a lawsuit and he was in the middle of a divorce. Wow. He eventually bought back control of his company with a loan from JP Morgan, settled the shareholder lawsuit and resolved his divorce. Catastrophic 30% loss and forced liquidation. To make matters worse, the shareholders filed a lawsuit and he was in the middle of a divorce. He eventually bought back control of his company with a loan from JP Morgan, settled the shareholder lawsuit, and resolved his divorce. But when asked how he dealt with his psychology during this period, Bill responds, "This was not my first proximity to disaster. I had another moment in my career in 2002, and I learned this method for dealing with these kind of moments, which is you just make a little progress every day." During this period, he would say to himself, "Today I'm going to wake up and make progress. I'm going to make progress on the litigation. I'm going to make progress on the portfolio. I'm going to make progress on my life." He explains in the clip below. Progress compounds a bit like money compounds. You don't see a lot of progress in the first few weeks, and you can look up at the mountain top where you used to be, because you will just give up. Just take it step by step by step, and one day you wake up and you're like, wow, it's amazing how far I've come. It reflects on the chart of Pershing Square's share price. That huge drop that felt like a complete unbelievable disaster looks like a little bump on the curve, and that really gives you perspective on these things. You just have to power through nutrition, sleep, exercise, and a little progress every day.
On the curve. This is not my first proximity to disaster. I had another moment in my career, like 2002, and I learned this method for dealing with these kind of moments, which is you just make a little progress every day. So today, I'm going to wake up, I'm going to make progress. I'll make progress in litigation, I'll make progress in the portfolio, I'll make progress with my life, and progress compounds, a bit like money compounds. You don't see a lot of progress in the first few weeks, but 30 days in, okay, but you can't look up at the mountaintop where you used to be, because then you'll give up. You're just, okay, just make step by step by step, and then 90 days in, you're like, okay, I was way down there. Okay, I'll look up. Just keep making progress, and progress really does come out. And one day you wake up, wow, it's amazing how far I've come. And if you look at a chart of Pershing Square, our company, that huge drop that felt like a complete unbelievable disaster looks like a little bump on the curve, and it really gives you perspective on these things. You just have to power through. And I think the key is nutrition, sleep, exercise, a little progress every day, and good friends and family. I have to go take a walk with a friend every night. A sister loves me, and parents were supportive, but they were worried about their son or brother at this moment.
Wow. That was a good one. Okay. Thank you. Startup Archive. Do I follow them? I do follow them. Okay. Bill Ackman's rock bottom, losing millions, a brutal divorce, and Brad Pitt. Oh yeah. And Brad Pitt. Bill Ackman quotes. We'll also dive into specific to philosophy over here. Investing philosophy. On investing in risk, I'm not emotional about investments. Investing is something where you have to be purely rational and not let emotion affect your decision making, just the facts. On activist investing, if you're going to take a company and change its direction, you have to get involved in a very significant way. On learning from failure, experience is making mistakes and learning from them. Context of setbacks like Herbalife and Valiant. On short selling is not about rooting against a company, it's about identifying a business that's going to decline in value and profiting from being right. On leadership and accountability, the best CEOs are the ones who are willing to admit when they are wrong and take decisive action to fix it. On persistence, you have to have a very strong stomach and a very long-term perspective to be an activist investor. On wealth and responsibility, I think the best way to give back is to create opportunities for others to succeed. On public perception, I don't mind being the bad guy if it means getting to the truth. Reflection of his willingness to take controversial stances as seen in his Harvard campaign. On timing the market, the greatest trades are the one where you are early and everyone thinks you are crazy. Spoken about his 2.7 billion COVID-19 bet. On confidence, I'm not afraid to be wrong in public. What I'm afraid of is not being right when it matters. Not being right when it matters. I like this grok thing. Think harder. Think harder. Développez pour voir les détails. Let's go. Reflection. D'une durée de 10 secondes. I think a lot of people are afraid of losing money. I'm not. I think losing money is part of the game. It's part of investing. You have to be willing to lose money to make money on investment, on investing in risk. I think a lot of people are afraid of losing money. I'm not. I think losing money is part of the game. It's part of investing. You have to be willing to lose money to make more money. Volatility is not risk. Volatility is opportunity. But activist investing is not about being hostile. It's about being a catalyst for change. Activist investing is not about being hostile, it's about being a catalyst for change. Emphasizes the constructive role of activism in driving improvements in companies. You have to have conviction in your investments. If you don't believe in what you're doing, no one else will. Conviction is central to his strategy, underscoring the need for confidence in his investment choices. On market opportunities, the best opportunities are often found in the most unlikely places. This highlights his knack for identifying value where others might overlook it. The best opportunities are often found in the most unlikely places. This highlights his knack for identifying value where others might overlook it. On learning from mistakes, I made a lot of mistakes in my career, but I've learned from every single one of them. Ackman views setbacks as essential learning experiences that fuel growth. I've made a lot of mistakes in my career, but I've learned from every single one of them. Ackman views setbacks as essential learning experiences that fuel growth. On long term thinking, I'm not interested in short term gains. I'm interested in building long term value. His focus is on sustainable success rather than fleeting profits. Building long term value. On business ethics, integrity is the most important thing in business. Without it, you have nothing. He places ethical conduct at the core of his professional philosophy. On leadership, a leader's job is to inspire and motivate others to achieve greatness. Sees leadership as a means to unlock potential in others. On philanthropy, giving back is not just a responsibility, it's a privilege. Let's actually look at his current. What do we have over here? Also, giving back is not just a responsibility, it's a privilege. A leader's job is to inspire and motivate others to achieve greatness. Okay, let's go back. Bill Ackman, CEO, Pershing Square, co-trustee, Pershing Square Foundation. We bet on innovative leaders solving humanity's big societal, environmental, and health challenges. A really easy mark for Trump, 3 columnists on the threats to elite colleges. Okay, we have a lot of politics these days. We were badly misled about the event that changed our lives. So it's a lot of politics these days. What is involvement with politics? Let's see. A number of my good friends and family have been surprised about my decision to support Donald Trump. They have been surprised because I've always considered myself to be a centrist and or moderate, and I have voted for the candidate and supported the issues and policies that I believe are in the best interest of the country. Some have accused me of supporting Trump because doing so will somehow benefit me financially. Fortunately, I do not need any financial benefits, as I and my family have well more than we need. I have also committed to give away the substantial majority of my resources at or by the time I'm no longer, so I don't consider personal financial benefits in the determination of whom I support for office. Some have suggested that I'm supporting Trump because I'm seeking a position in his administration. To be clear, I haven't been offered one, and I wouldn't take a job in the administration. I love my job, and it is the wrong time in my life to work in an administration. I will, however, do everything else I can to help the president succeed in helping our country and its citizens. All of the above said, I'm an investor who manages funds that own some of the best, principally American businesses in the world. In a better governed and managed America, these businesses will do better and increase in value faster. One might therefore argue that being long America is somehow a conflict, so I thought to disclose this potential conflict here. Some of my friends who support the other candidate are okay with me supporting Trump, but don't want me to attempt to convince others to support him because I strongly believe that a Trump administration will be better for the country and the world than a Harris administration. I promise to share my thinking about why I came to this conclusion in a future, more detailed post. I intend to do so in possibly more than one post, with this one, explaining the actions and policies that are catalyst for my losing total confidence. Okay. This is a long one. Let's see. Pershing Square Holdings. Pershing Square Plaza. Welcome to Pershing Square Holdings. Company overview. Okay. Annual investor presentation replay. Investment holding company structured as a closed-ended fund principally engaged in the business of acquiring and holding significant but generally not controlling positions in a concentrated number of large capitalization companies. Objective is to maximize its long-term compound annual rate of growth in intrinsic value per share. Incorporated with the limited liability under the laws of the bailiwick of. Okay. It commenced operations on December 31, 2012 as a registered open-ended investment scheme. Okay, listing information, contact details, and can we see performance, material, corporate ESG press releases. Oh yeah, this is about us page, board of directors. Wait, are we looking at the wrong Pershing Square? No, this is the right one. Yeah. Pershing Square. Board of directors. Rupert Morley. Independent director Andrew Hampton Dope. Performance. Pershing Square Bill Ackman. Let's quickly go to Wikipedia to see what we have. Oh, there's a difference maybe. Pershing Square Capital Management. No, it's the same. And it doesn't list his name. Wow. What did it say over here? CEO Pershing Square. Okay. Former chairman of a New York real estate financing firm, Ackman Ziff Real Estate Group. What is Ashkenazi Jews? Former distinct subgroup of the Jewish diaspora that emerged in the Holy Roman Empire around the end of the millennium CE. They traditionally speak Yiddish, a language that originated in the 9th century and largely migrated towards northern and eastern Europe during the Middle Ages due to persecution. Herbalife short. Let's keep that as the last one. Tell me all about Bill Ackman's Herbalife short. One of the most infamous episodes in his career as a hedge fund manager. High-stakes financial saga that turned into a public spectacle, involving billions of dollars, a personal feud with Carl Icahn, and a test of Ackman's activist investing philosophy. The setup, identifying the target. Through his hedge fund Pershing Square Capital Management, took a $1 billion short position against Herbalife Ltd, a Los Angeles-based multi-level marketing company that sells nutritional supplements and weight loss products. A short position bets that a company's stock price will fall, profiting when it does. Ackman's thesis was bold and damning. He claimed Herbalife was not a legitimate business but a pyramid scheme, illegally operating by enriching top distributors at the expense of millions of low-level sellers who lost money. Conducted over 18 months, alleged that Herbalife's revenue came not from genuine product sales to consumers but from recruiting new distributors who were pressured to buy inventory. He argued the structure violated U.S. laws against pyramid schemes which rely on recruitment rather than retail sales for profit. On December 20, 2012, he unveiled his case in a dramatic 334 slide presentation at a New York investment conference titled Who Wants to Be a Millionaire? He called Herbalife the best managed pyramid scheme in the history of the world and predicted its stock would collapse to zero once regulators and the public caught on. Stock plummeted after the presentation, dropping from around 40 to 26 within days, 35% decline, vindicating his initial move, which involved borrowing and selling Herbalife shares with the intent to buy them back cheaper later, stood to profit massively if the slide continued. Ackman didn't stop at the presentation. He launched a full-on crusade, releasing reports, videos, and a dedicated website, factsaboutherbalife.com, to hammer his point. He even lobbied regulators like the FTC and lawmakers, including a letter to then Senator Ed Markey, urging investigations. Enter Carl. The short quickly became more than a financial bet, it turned personal. 2013 billionaire investor Carl Icahn, long-time Ackman rival from their Gotham partner days, took the opposite side, buying a large stake in Herbalife. Icahn saw value in the company and dismissed Ackman's pyramid scheme claims as overblown. The feud exploded on live TV during CNBC halftime report Showdown. Called Ackman a crybaby and bragged about past victories over him, while Ackman accused Icahn of bullying. The clash was raw, unscripted, and electrified Wall Street. Entry shifted the momentum. His buying spree, eventually amassing a 16% stake, drove Herbalife stock back up, squeezing Ackman's short position. A short squeeze occurs when rising prices force short sellers to buy back shares to cover losses, pushing the stock higher still. Other hedge funds like Dan Loeb's Third Point also piled into Herbalife stock, betting against Ackman. The stock climbed past 50, erasing his early gains and putting Pershing Square underwater. This is very interesting. It's like now it's not about facts, it's just emotions. It's just people, it's just numbers now. It's just numbers and emotions. Either you don't like Bill Ackman, so you take stance opposite to him. That seems to be Carl Icahn. And since Carl Icahn was so strong and he take an opposite stance, other people see that Carl might win over here. So now for them, this is just a numbers game now. They know if momentum is going there and Bill Ackman is a massive short, there's an opportunity to win over here. So they will put more money. So it doesn't even depend on whether Herbalife was actually a pyramid scheme, whatever the facts are about Herbalife. It's more about the emotions and the profit over there. The PR war and regulatory push. Ackman doubled down, spending an estimated 50 million on a PR blitz to keep his narrative alive. He funded documentaries, hired lobbyists, and partnered with advocacy groups to spotlight Herbalife's alleged victims, low-income individuals, often minorities, who he said lost savings chasing the Herbalife dream. He presented data claiming 88% of distributors made no profit, with 600,000 quitting annually. Herbalife countered aggressively, hiring top law firms and PR teams, releasing its own videos and arguing its business were legitimate with real product sales to millions of customers. Bore some fruit. 2014 FTC launched an investigation into Herbalife, partly spurred by his pressure. That year, Herbalife stock dipped again, falling to the low 30s, offering Ackman a glimmer of hope. Meanwhile, he adjusted his position, swapping some short bets for put options, contract betting on a price drop, which capped potential losses. The turning point. The decisive blow came in July 2016. Wow, this went on for years. After a 2-year probe, the FTC reached a settlement with Herbalife, finding it 200 million and forcing reforms like requiring 80% of sales to come from verified retail customers, not distributor purchases. Ackman hailed it as a proof of his thesis, noting the FTC called Herbalife's prior model unfair and deceptive. But crucially, FTC stopped short of labeling it a pyramid scheme or shutting it down. Herbalife spun the outcome as a victory, claiming vindication, and its stock soared 20% that day, hitting 65. The resilience baffled Ackman. Despite the fine and bad press, Wall Street saw Herbalife as a survivor, not a fraud. Icahn, who had made hundreds of millions, gloated, while Ackman's losses mounted, estimated at over 500 million by some accounts, as the stock defied his zero prediction. The exit. Late 2017, Herbalife trading above $70 and no collapse inside. Ackman faced reality. The position was bleeding. Pershing Square, which had already suffered $4 billion loss on Valiant Pharmaceuticals, eroding investor confidence. February 2018, after 5 years, Ackman quietly exited the Herbalife short, closing all positions. He never disclosed the exact loss, but estimates range from 700 million to 1 billion, making one of his career's costliest failures. Icahn, meanwhile, held his stake until 2021, profiting handsomely. The Herbalife saga damaged Ackman's reputation as an infallible activist. Critics call it a hubris overreach, a rare misfire where his research didn't match market dynamics. The stock's refusal to crash showed the limits of short selling against a company with strong defenders and a loyal base. It also highlighted the power of narrative. Ackman's pyramid scheme label stuck in public discourse, yet failed to kill Herbalife, where Charade trades around $7. The loss was a humbling pivot. He later admitted on podcasts and interviews that he had underestimated Herbalife's staying power and overestimated regulatory action. Pershing Square shifted focus to long investments like Chipotle and Hilton, rebounding with hits like the 2020 COVID trade that netted $2.7 billion. Actually, let's see what is Herbalife stock today. $8. Wow. 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 The Herbalife short remains a Wall Street legend, a clash of titans, a morality play about MLMs, and a cautionary tale about conviction meeting reality. It showcased Ackman's tenacity. By the way, this is big. Let's do the last quick search. What does Bill Ackman think about Herbalife today? Yes, it is a very good day for my psychological short on Herbalife, and it is an even better day for the world to see one of the biggest pyramid schemes fail. That said, it is sad that so many with so little have been deceived and bankrupted. So many with so little have been deceived and bankrupt by Herbalife, and it is incredibly disappointing that the FTC in 2016 chose to settle with Herbalife for $200 million and allow it to continue to operate. The FTC knew that Herbalife was a pyramid scheme in 2016. It knew it because it had hired a senior UC Berkeley economist and his team to analyze Herbalife distributor data and quit rates that the FTC had obtained by subpoena from the company. With access to this data, the Berkeley economist concluded in a detailed analytical report that Herbalife was a pyramid scheme. However, instead of shutting HLF down, the FTC took the quick victory and headline benefit of a $200 million settlement. It did so apparently because it was afraid of battling with Carl Icahn and the legal team he had assembled compared with the quick benefits of a $200 million settlement and favorable headlines. Attorney General also had the opportunity to shut down Herbalife. In fact, her former office still has the benefit of a consent decree that HLF had entered into in 1986 that enabled the California AG to shut down the company overnight. She should shut down HLF in around 2017, but she refused to do so. Her staff leaked its memo to us and the media at that time. Unfortunately, by then, no one was interested in the story. Partner Venable, one of HLF's top law firms, HLF has always been very savvy about managing its regulatory and legal risk. The media might seek to get a copy of the Berkeley Economist report and also dig up a copy of California AG staff memo. We probably have a copy of that memo in a file somewhere. The whole situation is an incredibly damning indictment of how our regulatory enforcement apparatus works. Our regulators' failure to act cost newly recruited HLF distributors billions of dollars in losses over the last nearly 8 years since the FTC settlement. HLF distributors are generally low income, often undocumented, aspiring entrepreneurs pursuing what they are misled into believing is the American dream. The FTC's failure to act made Carl Icahn $1 billion and cost Pershing Square investors $1 billion, but that's a sideshow. If you're a Herbalife employee, it's time to leave. The time to leave is now. Herbalife is not a good look on your resume. The longer you stay at the company, the worse your future job prospects. I always wondered how a legitimate person could work for a pyramid scheme. And to Michael Johnson, the management team and its board of directors, shame on you for the incredible harm you have caused and the lives you have destroyed. Wow. Okay. Great. That was a stream. That's